Welcome back, everybody. Quiet by wild day, to say the least, on the volatility side. We're going to get into that and some great trades out there today and some things that just didn't act right, but we have a lot to go over. So what we have is we have a doji sitting right in here. We're at 44, 27, 25. I don't think anyone's going to have a really tough time with this. I think we should be pretty happy that we have the number that we have. We easily could have closed below this. We did not, and we have a nice clean line coming straight across here where we're not really breaking. What you don't want to do is you don't want that bar to be 50% down, and that's not what we got. We got a nice close. We're staying right above the 50 on the RSI. The RSI is curling higher. You have this megaphone here, which is really, I'm surprised. I'm surprised that this is what we got. If you wanted to lock in profits ahead of CPI, which is tomorrow at 8:30, we just didn't do that, did we? We just kind of went sideways and aggravated a lot of people more than anything else, myself included. My best trade of the day was actually a long that was supposed to be a short, and I'll walk everybody through it. But it always goes to just show you trade what's happening, not what you think is going to happen. So what do we have tomorrow? We have CPI tomorrow, and what we have to focus on is a couple things. How do you play CPI tomorrow? The most important thing for us, we're going to drop the magnet right here on the trading view. So if you look right here and you just see 44, 36, 75, okay, that is your high. You're going to want to watch that level tomorrow. You're going to want to watch the low of this bar. I think it's fascinating that we were unable to get below that 44.07. And if you come straight across right here and you just drop on that wick, look where you closed. So 44.30. So you have a lot going on in here. Clean all this off, drop into an hourly, and get ready to see the most boringest chart you probably have ever seen, where we really did nothing. Clean all these lines off, pay attention to it for a little bit here. Some spots that we definitely want to pay attention to. So we could see the stair stepping, and the stair stepping is continuing. It's just not as exciting. And I think that's really just because you're waiting for the number to come out. All you really did was just form this kind of, all right, here's our breakout bar, and now we're going to go sideways until the number. I have my own belief on this number. I'll walk through a little bit on how I view it, but you can see 44.36 really very clearly in there. It doesn't get any cleaner than that. Let's get rid of this magnet. Funny how that magnet can be good and bad at the same time. And I really just want to come down to here. You never really got that follow-through bar there. You never got that follow-through bar over there, but you did flip, and this does become support and resistance, and we're always looking for that. We're always looking for where was resistance and where is now support here. And I do appreciate the comments that I don't have to go back and edit the fact that I have a line here just to keep rolling with it. And I really appreciate the comments on Saturday's video. I got very specific on Saturdays with 3 topics on rate of change, on several things, how the 10-year works, how things are connected. And I was a little concerned I'd be too detailed oriented, but I appreciate that. I'll link the video at the end if you haven't watched it. It got shared a lot, and I appreciate the sharing and the comments. It lets me know which way to go with the content. People say keep the detail up. So we know what to expect it tomorrow. Okay, let's say the number is a dumpster fire. Where would we get to? 43.61 is where I think you could get to. If we just take the moment and we just look at something like the RSI and say, okay, well, where does RSI look like? You're up near the upper range, but you're not really doing anything. Take a look at it on the 4-hour, and you already worked off the overbought, completely worked off the overbought and came down. It cost us all of 80 basis points. That's pretty telling. And to me, this is pretty telling. I'm going to clean all this off and just show you this because I thought this was pretty important too. So if we just take a look, let's go back to August since we started the drop. And then let's just put this as the neckline. And you see how we battled here and we're battling here and we're getting ready to flip that next neckline and come right across, just drop it right there. You can see the battles throughout, right? And you can see where we flipped it, and you can see where resistance becomes support, then the battleground, support, resistance, support. So there's your level, and that's a really substantial level. Get through this, start closing above it, and there's a couple key things that happen on the S&P that we need to pay attention to. Number one, you have a DTL up here, which is a downward trend line, and you can see how that starts coming over from July. Number two, you have a minor one that's right here, and you can see how we broke there, and you have the points coming straight across. So you have a minor one, and here's your major one. So here's your minor, bonk, 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 right? All right. And then here's your major one. Your major one would take you up to 4,500. That's not unrealistic for you to get up there and for you to get up there fast. It's not. It really depends on this number. We're going to go over the number in regards to, I think it's better to just go over what the estimates are and what people think is going to happen. Goldman actually put something out. We're going to go over that in a minute. And they're focused on core CPI. And there's a reason for that. I'll address that in a second. So here we do. We have the NQ, right? And what do we have about the NQ that we should be paying attention to? Here we do. It's been a long day instead of here we go. Hopefully no one caught that, but you probably caught it now that I pointed it out. So here's your DTL. You're trying to break out of it, and then here you go, and now you're over. All right. Is this good? Is it bad? It is what it is. Is this confirmation? No. For confirmation of a double bottom, to be super technical about that being a double bottom and this being a base, it doesn't have to be at the bottom to be a double bottom. You need a confirmation move of a higher high. You got neither. You got this wonky little red bar that's just irritating me, that's neither confirming anything. And of course, when are they going to confirm? Tomorrow on CPI, if CPI is good. Now, what we did see is we saw ES down 7 basis points today. We saw NQ down 27 basis points today. And we saw IWMs decided to come to the party for once, up 30 basis points today. So are we seeing that rotation? I'm not sure. What I will say is this. I would pay attention to it. We want to see how this goes tomorrow. We did close above the 12 and the 22. I use a 12, a 22, and a 55. I suggest you use what you're comfortable with. There's one demarcation line, actually two, that I want to give you. But the first thing that I want to start with is the dollar. Dollar crossed, cannot get above the 12. And there's something going on here that we should be paying very close attention to. Get rid of the 200 and get rid of the 55 for a second. Let's talk about the 12. That 12 is now using itself, and the stock is using itself, or rather the index is using it as what? Resistance. That is becoming resistance. It was a battleground. So here it was support. Then it becomes what? Basically a non-factor, right? Whenever you're trending and then you're non-trending, moving averages become a non-factor. When trend picks up, they become a factor. Trendless, non-factor. It's really important to remember that about moving averages. When they're going sideways, they really are. It's exhausting. But when you're trending down, you start trending down like this is setting up a perfect bearish pattern here. See the H? And you're riding this. You wouldn't even want to consider going long in here. And now we all know, I'll go off on one tangent, who benefits the most? XLI benefits the most from a weak dollar, right? Because all of a sudden they can sell their tractors all over the world. Just think about it that way. Boeing can sell their planes all over the world, and you don't have to deal with currency risk, meaning that whoever wants to buy their planes does not have to deal with currency risk. All right, so we understand that. We understand the dollar. We understand our levels and what we need to focus on tomorrow. We really want to focus on 15.6 on the NQ tomorrow and see how that goes. So we know our core pockets, and we know that RTY was stronger today. I think it's very telling that RTY was stronger today because they are the most interest rate sensitive. Now, the 10-year, and we should talk about today's action, but first, the VIX. We didn't get above 15. We can't stay above 15. If people were concerned and they wanted to protect themselves, they'd be buying puts on the index. They didn't do that today. Even though we were up 4% today, that's nothing compared to what could have happened if they were truly worried. So here we have TNX. I'm not worried about being below the 12. What we're going to do is just pay attention to the most simple levels. And what we had a bond auction today. Now that bond auction goes off at 11:30. Today was the 3 and the 6. What is marked is right here is this is the 3-month, 6-month Treasury auction. So I'm going to mark that at 11:30 because that's where we broke, right in here. Now, why is that important? It's important because this is what happened when China all of a sudden had problems and they were hacked, and the 30-year was a bad auction. This is what they did early in the morning to us. So they broke out of that level as if that was now going to be a non-event and it was going to go back to 30-year bad and they're going to sell off. And at the same time, you remember what happened to the indexes during this period of time, right? What happened to the indexes during this period of time? Okay, they sold down. All right, so then what happens? We start to see the rally and we break this level. This level tomorrow is substantial and you're going to want to pay attention to it because there was a battle here today. You had a battle that got you over it. The bond auction went exceptionally well today and got us below it. If you see us get through 465 like butter tomorrow and we just pop over this, you're going to have a weak day in the equities market, and we're going to want to watch that. So watch this level really closely. It's very important to watch that. They are hyper-focused on core. Now, what I have the preliminary way that Goldman thinks that this is going to go. This is public. It's actually on a couple different spots. I think Zero Hedge even has it on Twitter as well right now. But let me explain what they're looking at because I think that the devil's in the details. So what they're focused on, and you'll note that when we look at these numbers for CPI, sometimes we're focused on year over year. Sometimes we're focused on month over month. Sometimes it's core. Sometimes it's not core. Why are we focused on core this time? Core takes out energy and food. We're going to talk about that in a moment and what energy is doing and why I think the number could be lower. I'm not an economist. I just play one on YouTube. So you have to take this with a grain of salt. Everything I'm going over here, you have to understand it's just my opinion. I will trade what happens tomorrow, just like I did today. I want to show a clear example of what I mean by that in a moment here. But we should talk about smart money, dumb money too, and what's going on there. But if you take a look here and we see how this is playing out, the most important thing for us, core month over month, is what they're focused on. Why are they focused on that? The majority of growth in CPI last month was shelter, was housing. So if that is weaker, it'll be reflective in the month over month, much clearer than it would be reflected in the year over year. Also, core is going to make that shine a lot clearer than CPI, because CPI in and of itself has food and energy. So we want the shorter time frame, because that's going to be more reflective of the move month over month. And we want core because it takes out food out of energy. And then the less variables you have, the more clean that movement is. Why is this important, even though you can dig into the numbers yourself? Because you don't have that time. What happens tomorrow is going to be instantaneous. And this is how Goldman just broke it down. And this is how they say it. And this is important. You probably want to screenshot it. And I do think Zero Hedge has this out as well. They usually do, and they just put it out there on Twitter. But what you're seeing here is just, look, if you're going to come at 0.3 is what they're looking for. You come in 1.5 or 0.15, you're going to go up 1%. You beat by a little bit, so you come in at 0.2 versus 0.3, which is where you're supposed to come in. Okay, you're going to go up 75 basis points in line. They think you're going up 30 basis points. It comes at 0.4, 50 basis, 5 here. Any 0.5, I think it's a meltdown. I think they're being generous here, quite frankly. But you might want to just screenshot that and pay attention to it. Another thing that I tend to do, and we went through this in the pre-market public today, but one of the things I like to do is just look at where's crude oil over that period of time. So if crude oil's here, it's marked off, and we use the close of where crude oil is now, crude oil is down 9% month over month. And for me, this is a really back of envelope way to do it. Now, what's important is they've already taken this out. See how everyone's focused on core and they're not focused on this? So they're already anticipating what I'm anticipating here, that you're down 9% month over month. That is very different than where you were when you start looking at September. So if you look at September crude oil, and you were just saying, well, how did this affect us last month? And you said, well, here's the beginning and here's the end. We were up 8%, and this month we're down 9%. And then just go here and take a look at gasoline as well, which I think is important. And if you just do the most simplest of back of envelope things as well and go say, okay, well, here's the first, give me that first price right here. We'll use the open and then just go, okay, well, where's the close on 30 days? And that's going to take you right into here. All right, so this is just a back of envelope way of looking at the end of the world. And there's 8.5% that we are down. Okay, so where are we last month here doing the same exact thing? Come here in September and we go here from September 1st and we go to the 30th. And then go, is that going to make a difference? Well, it's not going to really make that much of a difference, right? From here, you're about 4%, but you're lower. So you have sequential decline in gasoline prices. Everything is transported with gasoline. Therefore, it's in CPI, whether they want it to be or not, it is. And you have oil that is down. So I think that's important for us to pay attention to. Before we get into names and before I get into smart money, dumb money, there is something I really want to go over. So one of the things in these public videos that I tend to do is I will give you my opinion. And I want to be real clear about this. This is an opinion. I will trade what is going to happen. I will make money off of what is going to happen. I don't tie my ego to anything. And that's a really important distinction, because I noticed a lot of people will have an opinion and then they'll want to stick with that opinion. So today we did this trade, and if someone told me this was going to be the best trade of the day, I would have absolutely laughed. And I'm going to show it to you, but I had a bias going into today that Tesla was going to get crushed, that they were going to have a bad day, they were going to rally up, and then after they rallied up, we were going to watch this absolutely come in. Instead, what we did, now, and I want to just show this as well, what I do when you have movements of the previous day that are somewhat volatile is I will leave anchored VWAP on from the previous day. And what I noticed today as I was watching this, hoping it was going to crack and go to 195 and think about how well I was going to do, because I missed it up here because I was too busy doing other trades. I think we were trading the video, pulled money out of something. I'll have to go back and take a look. But it comes down here, and all I see is this. All I saw was this. I'm going to show it to you live in a second. I rally up, I pull back to that anchored VWAP, and then I cut over here. And all I'm thinking to myself is that's going to bounce, and my process, and here's my thought on this whole trade, we're going to bounce to VWAP, and I can scalp this. I can make a couple bucks off this trade. So as it starts trading up, I'm trimming, and then I'm watching what's happening. So I'm trimming into it, but I'm leaving a runner. Here, watch the trade.
Tesla right there. I'll know really quickly if it's going to work or not. Tesla, but I thought I might get a push into this. So I'll just pull out like $1 or something. So you're not oversold here yet. So I'm just scalping it, just selling right into those little pockets right there. That's all I'm doing. Like when it popped up here, I'm just scaling out of it. Now I'll hold the rest. And then if it breaks even, I'm up like 40 cents. So if it breaks even, I'll just blow it out on the rest. This was pretty telling. So I pull something out. Just write the VWAP. Let's see what happens. What am I at, $1 in this now? Again, I want to be short this. So this is actually really where you'd start looking to short it. If you roll right back over, then use the high, this is really where you'd short it. So I expect some kind of rejection here, but we'll see. Well, that worked out, didn't it? There's $2. All right. So I'm going to pull some more out. Stocks break even on the rest. Actually, I'll use a 1 minute close below VWAP now. So all I did was a scalp trade off of yesterday's VWAP. So you did a scalp trade off of yesterday's buy right in here. And then all I did was this. Show you. See how that wick right there? So as soon as you flip that wick, up, down, boom. So here's your retest, tests, back, retest, goes. So as soon as you do that, I just did it. And then I'm watching this bar and the RSI is back over 30 because now you have the open, right? So now I'm going to get out of more right here. I'm going to close more of it because here's the open. So all the people that bought the open just got a reprieve. So they're probably going to close some. So I closed more right in here. I mean, maybe it pushes, maybe it doesn't, but my bias was to the short side on the name. So now if you retest here and you fail, it's a perfect spot to short if you want to. Somehow I'm that long Tesla this morning. We'll take it for now. They're probably not going to reject again here on Tesla. Like it's very rare that you're going to break over this level and then reject. It can happen, but it's rare. It's probably going to push here. If you're trying to figure out like trimming, I'm down to about half the position. Don't reject. Hello. So the rest of the Tesla, I was using VWAP. I'm probably going to use this open for the rest of it now. From here, just off that scalp trade, just off of here, we're up about $4 or $5, probably closer to $5 now, but I still have that. I don't have a full position, obviously. Wow, we picked the low of Tesla today, didn't we? Someone told me my best trade today was going to be Tesla long. I would have told them they were crazy. This Tesla position, I'm just leaving alone for now. The rest of it turned into a big trade. Surprisingly, geez, this Tesla's turning into a monster. Right into that 200 day. I'm up 10 points. I'll just close the thing if I do. Get kind of close to closing it anyway. He'll be the stop on the rest. After this bar closes, that'll be it. At some point, I'm going to blow the rest of this Tesla out and I'll just post it. There it goes.
Now, why is this important? This is important for a couple of reasons for people to get. I have a bias. I'm thinking one thing. I see a trade. So I have an option. And this just comes from experience, guys. So you don't want to beat yourself up over it, but you need to think like this. When you take a look at something like this and it provides an opportunity, you can either do one of two things. You could say it's clearly going to break because I'm right and it's going to smash, or you could watch how the price action moves and trade off what is actually happening and make money. This rallies up, trades up to here. Now, did I hold a lot of it? No. As it scaled up into here, into VWAP, I sold some. As it scaled into the open, I sold some because I had no faith in it. But what did I have faith in? I had faith in the process. And then when I got to that $10 price, I just got out of it. I'm like, this is silly. I'm up a ridiculous amount on something that I didn't even expect to go that way. And then at the end of the day, we made a high, made a lower low, high, broke the low, and I went to put a short on. Now that short worked for about $1 until it didn't work. But my thesis, I'm going to be really clear about this, and how I came in today didn't work. But even though I had a short bias in the name, we were able to profit on the long side. And then you can see here that the scalp, 100% out, up $10 in the remaining of the trade. And then later in the day, right around here, I put a short on. And I followed what I wanted to do. And that didn't make anywhere near. And if we stayed in, you're actually down on that now. And we pulled some money out on the downside. But point being is, my thesis was one thing. But knowing what was happening and how to profit from it was something completely different. I hope that makes sense. I would like some comments on that if you guys think showing that kind of stuff is helpful. I think it's extremely helpful because too many people and this is just inexperience, they're tying their ego, oh, you said this or I said this, therefore I have to stick with it. No, your job is to make money, period. And if that means that your thesis doesn't play out that way and you can take the other side, make money, that's your job as a trader. So keep that in mind. Now, there are a bunch of names here that I want to cover very quickly, especially in semiconductors to watch tomorrow. But I think it's really important for you to understand what's going on with smart money, dumb money. Now, one of the things we like to follow here, and I get asked to follow up a lot, is smart money, dumb money confidence. For those that are newer, we don't refer to it as smart money. We don't refer to it as dumb money. We refer to here as institutional money, and we refer to here as retail money. So institutional, retail. This is just very simply at this point 3 years. We're going to tear this apart and we're going to drill into the components of it, and then we're going to look at it as a spread as well. But let's just look at what's happening here. So we have the dumb money, which is actually buying into this market, right? And why would I say that they're buying into it? Because you're actually making higher highs. Now, if you can see in here, you have the smart money that's actually getting to the point where it's starting to roll over a little bit. And this will become a little clearer in a moment when we dive into this. The important thing that you can understand by showing these numbers is smart money or institutional money is above, and here's where dumb money is. Keep that in mind as we go into the next two graphs. Now, this is smart money confidence. Let's get to that arrow. This is smart money confidence, or as we refer to it, institutional money confidence. So what we did here was we just broke it out. And again, we're just looking at 3 years. Now, what can this tell us? Well, about a month ago, for those that watched that video, we went through this and explained that it's not just the peak over aggressive line that we want to watch, and then you obviously have your optimism and your pessimism line right here, and then they're just denoted by the numbers that are over here. What we're really focused on is the trajectory. Why? Well, when you're changing your shift, so what we're looking for is sentiment shift. And why are we looking for that? Well, that tells you if they're buying or if they're selling. If you're dropping down, that's something that you're going to want to know. Why is that important? Because that changes what we're saying. Right? So if we're dropping down, we want to be aware of it. Usually, when you drop down in here, if you look really closely, when you're dropping down, even here and here, you're going to note that you actually have these little rises. And you're going to just want to pay attention to that for a moment. You can see that right here. As this drops down, this one's pretty glaring. And why am I showing this? Because that's exactly what's starting to happen now. So you see you're dropping down here, and you have these little blips along the way, but you can actually see that by the time you got to that, look at the difference in what you were dealing with, right? So, and then again, here's just another one, and we could use that as the demarcation line, and then say we stopped here, and then we can use that one as well. So you can see where we're going with this, and very clearly, these are all little nuanced moves, but just look for the bigger ones because it really hammers home what I'm trying to explain. And there'll be anomalies where it all won't fit because nothing works perfectly ever, and we all are aware of that. But what we're starting to see this roll, and we're starting to see this start to turn and point down. And why do I think that, and why am I looking at it that way? Well, this is actually almost a lower low already, and the market's heading higher. So that tells you what institutions are doing, or quote, smart money. When this starts to roll down, the S&P goes higher. So that's something we want to pay attention to. Now, here we are with dumb money, but we don't refer to it as that. We refer to it as retail money. And what are we looking for here? Well, we're looking for them to get involved. So we can refer to them as dumb money because that's when they're fully invested at the top. All right. So if you want to give them something, you want to give the institution something, that's when dumb money is fully invested at the top and they're puking it out at the bottom. All right. So keep that in mind. I don't really view it that way because we've seen the shift, and where you want to go and how you want to play this is when they're washed out and they're heading higher, you want to be involved. As a matter of fact, this is all sentiment traders you may be aware of. And they actually even created a spread to monitor this, which is fascinating. We're going to get to that in a moment. But here we are. And what usually happens? Now, this is interesting. Well, I think it's interesting. So you're going to have to deal with it. See these marks? Okay, so you can see right here, pessimistic, optimistic, right? Pessimistic, optimistic, pessimistic, optimistic, almost here. Very rarely are you not having a major correction after you get to this level. By correction meaning you're reverting to the next line, although it takes months. So if you're here, and let me leave these on for a second. If you're here and here, the tool I'm using to draw on here is called Screen Brush. Every once in a while I'm asked about that. It's a really great tool, and it just allows me to put these arrows, and I can actually change even the colors of the arrows and everything. Sometimes people ask about it. Anyway, so you can see what I'm putting down here, hopefully, and how we're running. Okay, how does that correlate with the market, right? Give you something that you can actually utilize this week. Now, it also doesn't matter when it reverts. Revert in the middle of the chart. But the best for me, the ones that I like, because I like confirmation on things, I like when it's below here, but it really doesn't matter. What matters is understand that you're going to get to a position where if you're down here, most likely you're heading up to here, which is going to lead to something like a decent move higher. You're going to get something like this or like that, right? That's what we're going to get. And every single one of these had a move, but every single one of these is not the same. So what this is telling us is, yes, this is great, but we don't know the magnitude of this move. In other words, I can't tell you for certain that this one here is going to give us the same move as this one's going to give us. We don't know that. We just know that if this happens, the trajectory changes. Now, for time's sake, again, cross them out. We know what they really are. And what we're going to do is just point this out that this is a spread up here. Now, what does that mean? That just means that that's something that they actually come up with a little equation. They divide smart money by dumb money, and this is what they come up with. All right, so what would we be looking for here? Well, we'd want to look at what happens when the spread gets excessive and does it roll back down? Well, it rolled back down to a zero line here, but what happens when it gets up to here and then drops, or up to here and then drops? Up to here, drops. Hopefully you get what I'm putting down. And what you'll see is during this period of time, you're going to get a reaction of this dropping. And then what happens here is we're going higher, right? Now, it's again, nothing is 100%. This dropping, and then you would go from here to here. Got you there, but there was a little bit of pain involved on that one, wasn't there? Then you're dropping here, and then you would just mark it off again and again. And you can see where we're going. You can actually mark down here with that one, but it is what it is. So here you are, right? Up. And what does up do? Up is the exact antithesis of what we just talked about. Up is going to get you what? This, okay? Well, we just went up. Well, what are we doing now? Now we're going down, right? Don't overthink it. Sometimes it's really that simple. So if this spread, right, continues to go negative, you get into an environment, right, heading towards negative, where you get to an environment where dumb money, right, is going to exceed the price of smart money, which is why you would get a negative reading. You're at zero right now. Why that would happen, okay, is because smart money, right, is dropping and dumb money is rising. So to me, this is very constructive. Please comment below. I get a lot of comments to show this, but this is very constructive. And I think it's something that we should certainly be paying attention to right now. Now, I think it's really helpful to see how these guys are positioning themselves right now. If we take a look at NVIDIA, you got over, you tried to make a higher high close. I think there's a couple important things that are going on here. The high here was 491.16 today. You start coming over here, 499.500, you're nowhere near it. The close this day was 492.64, you're not there. If you look at today's bar, and I do look at this stuff, okay, you're not really halfway up on that bar. That doesn't mean that you're automatically going to come back down, but it does mean that you had more sellers into the end of the day, and we're going to be aware of that, and we want to be aware of it. A couple other things I want to be aware of. So this is a key rejection level. This is from the newsletter. If you don't get the newsletter, there's a free link in description. If you're on the wait list to join the community, that list is open for another 3 days, and then enrollment will close for the rest of the year. So if you're looking at this level right in here, we just keep getting Matumboed right there over and over and over again. What does that mean? It means that we're going to have to see how this plays out. XLY is actually seeing some outflows. So I don't know how this is going to play out there. That's not the name I would look at. AMD, we had a bunch of people in the room that were playing this. The way that I look at that, you just had a monster move, and you're going into a major event tomorrow, probably one of the largest economic events for the rest of the year. And if you're not going to break out right now, then you're just not going to break out right now, and that's fine. But you didn't really fall apart today. You have an inside bar sitting on a major resistance level, and it just doesn't stop here. It's here. It's all throughout here. You have a bunch of nonsense that you have to deal with. Microsoft, again, disappointed in how it acted, came in long the position. It just didn't do very well today, but I thought we might get some follow through, but here you are sitting right on that key level with this little bar. So they made your life really easy tomorrow. And by easy, I mean, all they're doing is they're having you wedged in here perfectly. And you really have a bar here that's $3 long, $2.50. So it's going to be really easy to see which way that bar breaks tomorrow, and does that give you some kind of semblance of a trade that you're able to put on. I think it's going to give you a semblance of a trade, and I do think it's something that we should be paying attention to tomorrow. I don't have anything that's that strong, nothing. Even when you start looking at like Meta and what's going on here, and this huge, flagpoles don't need to be straight, guys. And you start seeing how this is going. This is really impressive. And it's really hard to not take a step back and look at how some of these names are playing and how some of these names are going. Remember, PPI follows CPI. XLC looks like it's ready to break out. XLK looks like it wants to continue. But I think Apple and Microsoft are just taking they're 45% of XLK. I think they're just taking a little bit of a break, and I don't really think that's the end of the world here. Now, the winning sectors on the day were XOP, gas exploration. I don't know if it's because we're at a major support level and they held here, but they're all starting to hold these key levels. And I just find that somewhat interesting, and I thought it'd be worth pointing out ahead of the number. Now, the entire trade tomorrow is going to be that number and how that number comes out. That's it.